Hi guys, welcome to Shal Studies. Today we'll start with how to write a ledger account. So while writing the journal entries, you have noticed that there will be a number of accounts, right? For example, cash account, capital account, purchase account, sales account. Like that, we'll be having a number of accounts. So in order to get the details of each account, we are making ledger accounts. Okay, so for cash account, we are making a ledger. So for capital account we are making a ledger, for purchases account we are making a ledger, and like that. So there will be a number of ledger accounts. Fine. So first of all, let's see the format of a ledger account. Here we can see there are two sides, debit side and credit side. The center line separates both debit and credit side. Okay, so at the debit side there is date column, we know what is that. Particulars column, yes, we are writing the detail in there. Then JF column, that is like LF, it's a page number here. And then the amount column, same like that. At credit side also we are having date column, particulars column, JF column, and amount column. So now we will see a sample journal. From that we are making ledger accounts. Okay, so this is the journal we are planning to make ledgers from. Okay, so here first thing you have to identify which all accounts are there. Here a number of accounts are there. Cash account is there, capital account is there, purchases account is there, again cash is coming, then plant and machinery is there, again cash, then creditors are there, then again cash, then debtors are there, then again sales account. Like that a number of accounts are there. So first we need to identify which all accounts are there in the journal entry. That is the simplest way you can start with. So let's note down the accounts: cash account, capital account, purchases account, plant and machinery account, creditors account, debtors account, and sales account. So there are 7 accounts. That means we have to create 7 ledger accounts. So in this way we are making 7 ledger accounts. I hope it's clear. It's better to create all the ledger accounts first and then write the transactions, because it will be easy for you. Now let's see how to post these journal entries in the ledger accounts. So for that we need to go back to our journal. The first journal entry is cash account debtor to capital account. So we need to understand that we have to post both in cash account and capital account. So how we will write this? We have to first take cash account, okay? Then we have to see cash is debited or credited here. In the journal entry, cash is debited, right? So in the cash account, the cash ledger, we have to take the debit side and write the whatever is there in the credit side. Means it was cash account debted to capital account, right? We have taken the cash account, so what is rest? Capital. So we are debiting capital. Fine. Here the capital was credited in the journal entry. Here the just opposite of that. Now in the same way we have to do that in the capital account also. That means in the capital ledger also we have to do the same thing. So here when we are taking capital account, what is rest? Cash is rest. So that we have to credit. Fine. In journal, cash was debited and capital was credited. So when it comes to ledger, capital is debited, that is in cash account, cash ledger, and then cash is credited in capital account, that is capital ledger account. Now that journal entry is completed, we'll go for the next journal entry. Purchases account debtor to cash account. So here 2 accounts are involved, right? So we have to create 2 ledger accounts for that. That is purchases account and cash account. Cash account we have already created that. So let's see how we will post this in both the accounts or both the ledgers, okay? So first we will go for the purchases ledger account. In that what we should write? What is rest there? Purchases account debtor to cash account. So cash is rest there, right? So in the purchases ledger account we have to debit cash. Fine, there it was credited. So when it comes to ledger account, we will debit it. Fine, the amount is written. Okay, now in the cash account, already we have written a capital there. Now we have to enter the purchase also in that. So how we will do that? In the cash ledger account, we are crediting purchase. Fine, in the journal it was just the opposite. Here we are crediting it, there it was debited, right? And then the amount is written. Now we'll go for the next journal entry. Plant in machinery account debtor to cash account to creditors account. Here 3 accounts are involved. So we have to create 3 ledger accounts. The 3 accounts are plant and machinery account, cash account, and creditors account. Okay, so the first one is plant and machinery account. So we'll take plant and machinery ledger account. Fine. So what is rest there? Cash is there, creditors is also there. So we have to write both of this in that ledger account. Is that clear? Yes. So here in the journal entry, both of them were credited, right? So when we are posting it in the ledger account, we will be debiting it. Just the opposite of that. Clear? Now we have to take cash account. Now we are considering cash ledger account. So what is left? Plant and machinery is there. Also creditors account is also there. So should we take both of them? No. Why? Because creditors is the same side of cash, right? So we don't have to take that. We just have to take the opposite side. That is plant and machinery. Okay, we are only taking plant and machinery into cash ledger account. So there it was debited, here we will credit it. The same way in the creditors ledger account, we have to consider only plant and machinery. Why? Because creditors is at the same side of the cash. Okay, so we'll be only taking plant and machinery into the creditors ledger account. There it was debited, here we will credit it. So here you need to note that the amount, okay, the amount written there is 30,000 and 2 lakh. We are not considering the total amount there when posting it in cash ledger and creditor ledger. Now the next journal entry is cash account debtor, debtors account debtor to sales account. So the three accounts involved are cash, debtors and sales. So here first we'll consider cash ledger account. Okay. So what is left there? Should we take debtors? No, because it's the same side, right? We have to take sales. So sales amount will be what? Yes, 70,000, not 1 lakh, only 70,000. What is straight to cash account? That is 70,000. That amount we are taking with the sales account. Fine. Okay, in the cash ledger account, we are debiting sales account and the amount written is 70,000. So now we have to balance these ledger accounts or we have to close these ledger accounts. How will we do that? So first let's take cash ledger account. Here at the debit side we have capital 1,50,000, sales 70,000 and the total amount will be 2,20,000. Now at the credit side we have purchase 30,000, plant and machinery 30,000. So the total is 60,000. So which is more? Debit side is more, right? So at the total column is the double line. So there we are writing 2,20,000 at the debit side and at the credit side also we are writing it at both the sides. Now at the credit side we have to add something to reach that total, right? So that amount is balance carried out. So that means we are subtracting 60,000 from 2,20,000. So the balance amount 1,60,000 is the balance credited. The same amount we are writing at the bottom, where at the debit side we'll be writing balance brought down. Okay, that is the balancing amount that we are taking to the bottom, that is balance brought down 1,60,000. So what that means, while we were closing the account we had 1,60,000 balance and for the next year we are taking that 1,60,000, we are taking it. That's why it's written balance brought down. Fine. Now we'll take the capital ledger account. Here only one item is there, that is cash at credit side. That was 1,50,000. So to balance it, what should we do? At the debit side it's 0, so we'll be writing the total amount 1,50,000 at both the sides and now we are balancing it. So we have to add or we have to write balance carry down at debit side, that is 1,50,000. So when it comes to balance brought down, we'll be writing at credit side, that is at the bottom. Next one is purchase account. Here also only one item is there, that is cash at debit side. So while balancing, it will be balance brought down at credit side, that is the same amount. Okay. So the balance brought down will be at debit side, that is 30,000. Fine. The next one is plant and machinery ledger account. So at debit side we have cash and creditors. And at credit side there is nothing, so we are adding both the amounts, that is 2,30,000. And while we are balancing it, balance brought down will be 2,30,000 at credit side and balance brought down will be 2,30,000 at debit side. Okay, the next one is creditors ledger account. There also only one item is there, that is plant and machinery 2 lakh, that's as a credit side. So the balance carried down amount will be at debit side and balance brought down amount will be at credit side, that is 2 lakh. Now we have debtors account. Here also only one item is there, that is sales at debit side. The amount is 30,000, while balancing will be getting 30,000 at credit side, that is balance carry down, and balance brought down will be at debit side, that is 30,000. Again, there is sales ledger account. Here two items are there at the credit side, that is cash and debtors, 70,000 and 30,000. So we don't have anything at the debit side, so the balancing amount will be 1 lakh. That will be balance credit down at debit side and balance brought down at credit side. Now, in all the ledger accounts, we have got a balance brought down amount, right? At debit side or credit side, depends upon the account and situation. So this one we are taking into the trial balance. This is the format of a trial balance. We have account title, LF, that is page number, debit total, credit total, fine. In the column account title, we are listing out all the accounts, all the ledger accounts we are just listing out, and we are checking whether it's debit balance or credit balance. Means the balance brought down amount, whether it's at the debit side or credit side, and we are writing the amount accordingly. Nothing much, we are just writing the amount accordingly, and then we will total the amount. So always the debit side will be equal to the credit side. That's the rule. If it is not equal, that means your answer is wrong. So in today's video, we saw how to write ledger accounts and the trial balance. So that's all for today. Thank you.